Welcome, ladies and gentlemen, Commodity TV for you. Today we are talking to Bradford Cooke, the co-founder and CEO of Endeavour Silver. Yeah, one of the primary and large silver gold producers in the world. And we want to get his view on the markets after this, I would call it panic selling mode we had when cash is king all of a sudden. And a lot of people were probably a little bit irritated about the fact that they thought gold and silver should rise first, which it did not. And maybe now gold started first to rise, and we want to have the opinion of Bradford here with us. Brad, thank you very much. It's early in the morning with you in Vancouver. Thanks for taking the time. And what's your view on the panic selling here?
Hello, Jochen. And yes, thanks for asking me on to comment on gold and silver. You know, I had a number of shareholders in recent weeks asking what's wrong with gold and silver. They're going down. I thought they were hedges. They're supposed to go up. But history says that in a market panic, there's a rush to cash and everything gets sold. Mm-hmm. That is the history of market panics. So there was no surprise that gold and silver got sold. However, when the panic subsides, gold and silver invariably, particularly gold, are the first sectors to attract cash, to bounce back. Why? Because gold is nothing more than a monetary metal. Throughout history, it has played a role as a safe haven, as a protection of your capital, protection against debasement of currencies, fiat currencies. And we're coming into that phase very quickly here, post-crash. Mm-hmm. And so you've already seen, like last week, I commented that gold bouncing around 1,500 looked like it was trying to find a bottom. This week, just in the last 2 days, we've seen a fantastic bounce in gold. It blew through all of the resistance stops and has now officially recorded yesterday a breakout. It broke up to, I think, it closed yesterday at 1635 US. Today it's trading off just a little bit. And having held the $1,600 handle, I think we have a clear shot on gold now to 1880. So gold is doing what it's supposed to do, and it's the first sector to respond after a crash.
Absolutely, and it's highly liquid and really interesting, of course. And as I call gold, also the insurance for my wealth.
Correct.
Yeah. So silver, was really hammered down. Would you rate this due to the fact that silver is for approximately, I think it is 51 or 53% it is industrial use, right? And maybe even a little bit more. And is that one of the reasons because of the shutdown we see now worldwide economically?
Well, again, in the last 100 years, the history of silver and gold is that gold moves first and silver follows. Gold is a larger market. Silver is a smaller, more volatile market. So silver typically lags behind any gold move, and then it catches up with a slingshot. That is still true today, except that the business of silver has continued to evolve towards the industrial applications. And the investor has not yet rediscovered silver as a monetary metal in this cycle. It's too soon for the investors to come to silver. So unlike gold, which had a breakout yesterday, silver has not broken out. And even though it had a great day yesterday, and it's bounced $2 in basically 2 days off of its bottom, and the ratio, which peaked at 124, is yesterday 113, and I think it'll come back to 106 before any resistance. My comment on silver is that we just have to be patient. We know it lags gold. It doesn't have a breakout yet, but as it moves up through the $15 and $16 range, those are the breakout points for silver. And then you've got a clear run to 19 bucks. So I would just be patient. I can't tell you when that should happen. Obviously, we're in the lag period now, and ultimately we know for sure that history demands silver will play catch up.
Absolutely. Also, how would you rate, I think it was last night, Goldman Sachs told their 1,500 top clients, now is the time to buy gold, funny enough. And then we saw this morning, I got this from one of my bankers, I got a note that ABN AMRO is shutting down the physical accounts and you have to sell, otherwise you will be executed by 1st April. I mean, those are this is for me like also a panic reaction from the bank. I don't know the background, of course, yeah. So we don't know what is really behind. But if I read stuff like that, are we entering maybe a new phase in the precious metals? Because to me it was always when I spoke with investors, also at the fair in Stuttgart, for example, where you have been with me several times, and also in Munich. Sometimes you heard people, they were saying, "Oh yes, I bought gold. I bought a mini future long." I said, "Congratulations, you have the bank against you." And the other guys told me then, "Yeah, I have bought an ETF somewhere, wherever, yeah." And so now it looks to me a little bit like Xetra Gold in Euwax, by the way, in Germany, they have problems to deliver the golds due to whatever technical reasons. I have no idea what it is, but if I want my gold, I want to have it, and I don't want to hear any excuses. So are we entering maybe a new phase now in physical gold, let's say trading, also silver, and maybe also investment, going away from comics, away from paper gold, away from paper silver?
Listen, my kids are asking me about gold for the first time ever. Absolutely, we're coming into a new phase, and this is very, very early in the new phase where there's going to be a rediscovery of gold as a safe haven and as an investment that holds its value against fiat currencies. Absolutely. I think that the monetary system is going to be challenged here. I think with the U.S. government already proposing a 10% increase in money supply, 10% increase in government debt, and that's the first phase of their bailout to this current COVID-19 crisis. There's only one direction the US dollar can go. Right now, it has had a huge run. The US dollar actually peaked yesterday. It's a double peak going back to 2017. US dollar index peaked at 103. It's pulled back from that peak. Might go back there, might retest it, but there's only really one direction the US dollar can go from here, and that's down.
Okay, fantastic. How do you rate, let's say, living in Canada, as I'm in Switzerland now, and we are already probably 2-3 weeks in front of you? How is it going there? Do you see also people starting to buy physical gold and silver? Is the Royal Mint like working 24 hours? So what's going on there?
Well, we've seen a rush to the gold ETF because it's easy, it's liquid, you can get in and out of it, and really the people who are deploying cash now are only at least in America and Canada, the largest institutional investors looking for a return on their cash. I don't think the retail crowd are going to come back until maybe the summertime, post-crisis. But then you're going to see a very significant and sustained demand for physical gold and physical silver. That's my feeling.
Fantastic. Can you maybe give us also a bit of an idea here? As you saw, Daimler has shut down for 2 weeks, Volkswagen shut down for 3 weeks. They're all in short work now. But what I see here is like we are just postponing the e-mobility, the hydrogen, change of the systems here of transportation of our normal daily mobility. And this requires, of course, a lot of silver. Solar panels require a lot of silver, and all high-tech applications, I would call it. Do you think, let's put it that way, let's assume the economic, how can I say it, the economic action comes back in May. Yeah. Do you see there any problems of silver supply? Because now the refineries are not working, maybe some mines are shut down. Do you think this could have an implementation and an impact on the situation of the supply of silver? Because the demand is all of a sudden going through the roof, and maybe then therefore for the prices also.
So let's talk about the big picture and then get to silver. The big picture in the markets was that this was very much a flash crash. I mean, it literally, I won't say it came out of nowhere, but it happened very quickly and hit every market. And I believe the recovery in the markets due to the stimulus and due to the fact that the coronavirus life cycle is only about 2 to 2.5 months, means that the markets should actually rebound fairly quickly coming into the summertime. However, the economy not so much, because this has been a very sharp hit to the global economy, it's almost like chopping off a leg and an arm and then asking the economy to bounce back. So first, the arm and the leg have to be stitched back on.
Yeah.
I think the economy
Absolutely.
will rebound more slowly, and we are looking at recession, at least a 2-quarter recession.
Yeah.
And really after that, it all comes down to the confidence of the consumer. If the governments can get the consumer to get through the social distancing, get back to work, get back to normal so that people feel confidence, that's when the economy will really get going again.
Okay, super. And so for the usage of silver, what is your big picture there? I mean, we are building more solar parks in the world. We are using more e-cars. Even, by the way, I'm driving a hybrid now, so I consume also more silver than I did with my last car, of course. Yeah. And so, what is your picture there?
Well, I think again we have seen a short, sharp impact on silver demand, and we're seeing following that short, sharp impact on silver supply, with mines shutting down, ports closing, refineries closing. So that's why we saw a crash in the silver price, and now we're seeing a bounce back in the silver price. I think silver will plateau for a while gold continues to move. And then when the economy gets going, in other words, the gold's going to react to the market bounce back. Silver is going to react to the economic bounce back. And so there's the lag.
Yeah, fantastic. Where would you see in silver the real breakout level? Because I have in my charts, for example, 23. I know that's a high mark by now for several years. What is your personal feeling? Let's say also if we are going back to the situation 2003, 2004, because I'm still a bit reminded on that when silver was like $3, $4, I think, and all of a sudden it goes like bam, right?
Yeah. So the main pinch points, very short term, we're talking about $15 resistance. Once we break that, we're talking about $16.50 resistance. Once we break that, then we got a clear shot to 19. After that, it's 25 and beyond.
Super, great. I see it exactly the same way, even higher. Honestly, my target if it breaks for 23 is 37. I know you like that.
We stopped counting after 25 because all of the silver miners will be making a lot of money.
That's right, and Endeavour Silver also. Fantastic. That's a great final sentence. Bradford, thank you very much for this situation update, I would call it. And let's hope that this COVID-19 thing will be over by end of April, beginning May. As said, you are a little bit behind us, so we hope definitely for 19th April here in Switzerland already that we can restart the economy, which would be very good. And all the best for you. Stay healthy, most important thing. And thank you very much, and we talk soon.
You bet. Thanks, Jochen.
Thank you very much. Yeah, ladies and gentlemen, there was Bradford Cooke, the co-founder and CEO of Endeavour Silver, one of the primary silver producers, silver gold producers here in the world. And you heard it. Silver still has a way to go, but it is hopefully it goes above the 15, 16.50, and then probably the pass up to 25, as he said, is free. And honestly, with $25, the silver miners will make a lot of money. So probably a good idea to have a look at silver miners, and especially also on Endeavour Silver. Thank you very much, and bye-bye from Switzerland.